Good morning, everybody. This is Jack Gleason with MajorLeagueTrading.com, and this is a reminder to follow your rules and trade your plan. It is February 21st, 2019. Economic reports before the bell. ECB monetary policy meeting accounts at 7:30 a.m. 8:30 continuing jobless claims, initial jobless claims, and durable goods orders. Philadelphia Fed manufacturing survey after the bell. 9:45 flash PMI. At 10 a.m. existing home sales. 11 a.m. crude oil inventory. 11:30 we're gonna have the 4-week bill auction, and at 12:35 Bank of Canada Governor Polaz will be speaking. Our trend biases of the prior day were neutral in all four indexes. The Russell was actually bullish. Overnight is bearish, all four indexes. Shorter term, midterm, and longer time frames are bullish in all four indexes. Moving on to our previous day's summary in the S&P 500. The bell-to-bell high of the prior day was 27.90.75, came right after the FOMC meeting minutes. The bell-to-bell low, 27.73.75, and the settlement was 27.87. Value area high, 27.85 quarter. Value area low came in at 27.79 half, and the European closed at 27.83 quarter. Point of control, 27.85, and the volume was 1,236,000 contracts. Overnight high here in the S&P 500, 27.98, with the overnight low just getting put in, 27.78 quarter. Our floor trader pivot point support and resistance levels: R4A, 28.21, R3, 28.11, R2, 2800.75, R1, 2794. The pivot point for the day is 2783.75. 2777 is S1, 2766.75 S2, 2760 S3, and S4A is 2753. For our 10-day range analysis, the previous day, 17-point range in the S&P. The median's been 19.25. The entire session was 17.5. Median was 24.75. Overnight 9. First hour, brutal, 5.75 points, which is the tightest range for both the overnight and first hour sessions over the last 10 trading days for the S&P 500. So it was a super tight range off the open of the prior day, and then we got a little bit of an expansion, but generally speaking, our ranges were tighter than our medians. We did have a range contraction reversal yesterday. Index strength percentage change: the Russell was the best performer, up 0.5%. The Nasdaq lagged. That's been the story here for the last 5 days. Russell's leading, Nasdaq is lagging. Over a 10-day period, the Russell's up 4.2%, the Nasdaq's not even up a full percentage point. So let's go ahead and take a look here at these indexes. I want to start off with oil. We do have that oil inventory report here today. Oil yesterday completed an extension, which is drawn from the high here of Wednesday, and you can actually draw it from this high too. The high of the 14th, too high. That same anchor new high is going to be coming into play as a potential support level here with that oil inventory report, and that level is 56.49 as the 38% retracement, and then just below that we have the 56.15. So 56.49 and 56.15 are the two levels of support here in oil for a continuation higher, and then we have an unfilled higher time frame profit target at 57.82 that's come about 20 ticks away. For the NASDAQ has a full 50% retracement completion. A lot of the indexes have completions here in the overnight session, and that's actually where the selling pressure is coming from. The swing low from Monday, February 11th to high pulled back into the 69.83 halfway back with a 71.10 target. We traded 71.1375 in the overnight session, and that swing low from Thursday the 14th last week to high is now back in play after that completion. It's 70.44 in line with the lows on Tuesday, the lows on Wednesday, and that is going to be a crucial level of support. If we break that 61.8 at any time, then the bears will have control. But right now, 70.44 is the support level zone that we will look for, and a break below the 61.8 at 70.27, we will then have to look at the higher possibility of like a larger pullback. But right now, 70.44 is anticipated support. Moving on to the Dow. The Dow here, it's important to note a couple completions in the overnight session. One, the extension from the February 14th high to high completed at 26,027. So first off, that same anchor new high right here, the 50% retracement is 25,853, and that is in play here today. Another thing we need to be aware of is we completed a larger negative 61 up here on the daily chart, and we have run into the high of December that created this massive market reversal. So we're back up to the highs of December here in the Dow, and if we break below the 61.8 here at 25,799, then there's a possibility that we have more selling pressure beyond that. So if these levels do not hold, shorts are going to be in play. Gold has broken its extension in the overnight session. The high from the 31st of January too high, traded into close. We held a 50% retracement short, and we are trending lower now. There's a possibility we just come full halfway back from Thursday the 14th too high, and that would bring us really all the way down into 1327.3. There's a little level I have here at 1322.8, but right now we are in a short sequence here in gold, and halfway back shorts are holding. Our current downside target is 1332, and that completion is possible, I think kind of likely here today. So gold shorts are in play right now. Moving on to the S&P 500. The S&P 500 completed an extension. We have a same anchor new high. The extension begins on the 5th of February. We traded at too high, completed targets last night. Same anchor new high. Our 38% retracement is 27.74, and our 50% retracement is 27.67. So 27.74.75, or you can call it 27.75, depending on which way you want to round, would be the first level of support below. And then if we do not hold that, we're looking for a move all the way down to 27.68. And you can see, ever since we completed those profit targets last night, guys, this selling pressure is pretty aggressive. So I do want to note that this selling pressure is pretty aggressive. I'm trying to see, okay, we had a halfway back short here, and this looks like our current extension sequence. So I am going to just draw up that extension just so we can be aware of, if we break above it, that longs have control again. But right now, this market is targeting lower prices on the smaller time frame here in the S&P 500. So we do have some overnight bearish bias. In the Russell extension was the first extension to trade. Once again, the anchors from the 14th. That anchor traded on Tuesday, completed on Tuesday. We've ran all the way up into the negative 61 here in the overnight session, and that same anchor new high, the 50% retracement is 1571.7, and the 38.2 is 1576.2. If there is no reaction on these levels, definitely pay attention to the shorts. That would really bring in more selling pressure if we cannot hold these extensions. So going into today, it's going to be really important that these indexes hold above their 61.8 of all of the long draws that I have up here. If they don't, then we have potential trend changes on the hourly time frame intact. The overnight session has been bearish. So we'll have to see how this all plays out here. There's a lot going on, but that'll conclude my morning trade plan. I will share my levels with you guys in the room. Everybody have a fantastic day, and I'll catch you guys later.